Let's talk about retirement planning. You know, that thing we all think about. We all want a steady income, a reliable paycheck, right? But what if you could get that paycheck and the tax man could never ever touch a dime of it? That's the dream. And today, we're going to see if it's a dream you can actually make happen.
So here's the big question. How do you lock in a retirement paycheck that is both guaranteed for the rest of your life and completely tax-free? I mean, it sounds almost too good to be true, doesn't it? Well, it's not a fantasy. There's a specific financial tool designed to do exactly this, and we're about to break it all down.
So how on earth does this work? Well, it's not one single magic bullet. It's actually a combination of two retirement heavyweights. To get it, we first need to meet the key players. Okay, so on one side of the ring, you've got the Roth IRA. Its whole purpose in life is tax-free growth. On the other side, you have the annuity, and its superpower is guaranteed income. You can almost think of it like your retirement's offense and defense. One is for growing your money, the other is for protecting it.
Now, what if you could take those two and smash them together? What if you could get the explosive tax-free growth of a Roth IRA and pair it with the rock-solid security of an annuity? Well, that's exactly where we get this incredible financial hybrid. Let's see what happens when these two forces combine.
And here it is, the Roth IRA Annuity. Simply put, it's an insurance contract that you buy using the money in your Roth IRA. And the result? You get all those delicious tax-free benefits of a Roth, but with the ironclad, never-gonna-run-out income guarantee of an annuity. It really is a powerful one-two punch for retirement. And the process itself is beautifully simple. It's really just 3 steps. First, you contribute money that you've already paid taxes on. Then, that money grows completely tax-free over time. And finally, when you retire, you take it all out, you guessed it, completely tax-free. It's like a closed financial loop, totally shielded from the IRS.
Okay, so what are the actual real-world benefits of putting these two together? Let's dive into the combined strengths, because this is where it gets really compelling.
You get tax-advantaged savings and tax-free growth potential. That's amazing on its own. But the real game changer, the killer feature, is that third point, guaranteed income. That is a promise from an insurance company for a paycheck for as long as you live. And since it's all coming from a Roth, you can spend that money on anything you want, no questions asked.
But, this level of security and all these tax benefits, they have to come at a price. Nothing is ever totally free. So let's be fair and look at the potential weaknesses. It's really important to understand the trade-offs before you even think about jumping in.
First, there are limits on how much you can put in each year. Second, this isn't a set-it-and-forget-it kind of thing. It requires the discipline to make regular contributions. And third, and this is the big one, your money is pretty much locked up. Trying to pull it out early can come with some hefty restrictions or penalties. This is the core trade-off. You're swapping flexibility for that lifetime guarantee.
So just how limited are those contributions? Well, for 2025, the limit is $7,000 if you're under age 50. If you're 50 or over, you do get a little catch-up boost, bringing it to $8,000. So it's not a small amount, but it does mean this isn't a strategy for stashing away a huge fortune all in one go. All right, so we've covered the what and the why. Now let's get into the how. How do you actually set one of these things up? Let's look at the mechanics.
You've actually got a few different ways to do this. The most straightforward is just using the money you already have in a Roth IRA to buy an annuity contract. You could also convert a non-qualified or traditional annuity, but, and this is a big but, you'll have to pay taxes on all the gains first. Or you can just directly transfer your existing Roth IRA into an annuity. A few different paths to the same destination. So after all of that, the good, the bad, and the how-to, we land at the most important question. Is this thing actually right for you? Let's get to the final verdict. You know, it really boils down to this simple choice. If your absolute top priority is a guaranteed tax-free paycheck for the rest of your life, then this is an amazing tool. But if you need flexibility, if you might need to access that lump sum of money, or if you're in a low-tax bracket to begin with, this probably isn't the right fit for your financial toolkit. And I want to leave you with this, because this is the most powerful part of the whole deal. Even if your account runs completely dry, even if the value goes to zero, the checks keep coming, tax-free for the rest of your life. That is the incredible power of the guarantee you're buying into.
So the final question you have to ask yourself is this: what's more important to you? The absolute peace of mind that comes with a guaranteed paycheck that you can never outlive? or the freedom and flexibility to access your money whenever you might want or need it? Your answer to that question will tell you everything you need to know about whether a Roth IRA annuity is right for you.